to bore you, but we're going to talk more about the retail sector of the JSE simply because trading updates and results have peppered our newspapers and internet sites and this particular station for the last few days, and it's very, very interesting. It tells you something about what's happening in our lives and in the South African economy. On the line now from OMIGSA in Cape Town is Janine van Zyl, retail analyst. Janine, thanks very much for joining us. Let's start with this list, and you can summarise each one in whichever order you like. Shoprite, Woolies, Truworths, Ellie's, all very, very different and all fascinating.
Okay, I'm going to miss out on Ellie's. I haven't had a look at that one. But yes, well, let's start off with Shoprite. I think most of those results you've mentioned have been a little bit disappointing. Shoprite, the first one that came out and shocked the market. Really, volumes not so bad, but the pressure on inflation pushing down their like-for-like trading. Now that's quite interesting given what you were talking about earlier with your previous speaker, because it seems that food inflation at the lower end is actually relatively low, and that's not good for a retailer. So yeah, that wasn't great on Shoprite. If we compare that to Woolies Food though, Woolies Food still saw some decent inflation, and then that supported their food results quite well. I think we had about 7 to 8% inflation in Woolies Food versus about 4% inflation in Shoprite. That makes a big difference. And then if we just get onto the clothing retailers, Truworths and Woolworths Clothing, those were also both a little bit disappointing. On the face of it, Woolworths looked a lot better, but that was really because they're trading on a 53rd week this year, and Truworths had a 53rd week last year. So if we just look at the like-for-like, Truworths actually traded slightly better with about 13% sales growth, and Woolworths about 11.5%. Still, the market was a little bit disappointed. I think that's a reasonable sales growth given that we know we're in a weakish environment. But obviously there were some people out there expecting a bit more. I think what we can also see there is on Truworths' account some very low inflation numbers, and I've heard a few reports why this could be, and one of them is quite interesting, that the weather in Gauteng area has been very warm this year, which means that you don't really do winter sales, and winter sales are at a higher price point, so inflation will be low if you're not selling your very high ticket item jackets and the likes. Surprisingly, we didn't see quite the same effect in Woolworths, but still,
Let me just interrupt you briefly, because in Cape Town as well, I mean, you know, you're just up the road from us here, there's been no winter at all. We've had a bit of rain here and there. The temperature went down to about 8 or 9 degrees overnight, but nothing's happened. And obviously that does affect retailers. But let's get back to the Woolies story. Alex spoke to Ian Moore, the CEO of Woolies, yesterday. And I won't say that you can tell the health of a company from the demeanour of a CEO, but he certainly looked very pleased with himself. Should we not be fancy? Should we just say to ourselves, well, we've had all these results out, let's stay with Woolies and let's be cautious of Truworths and Shoprite and a few of the others?
Well, I didn't think that Woolworths' result was better than Truworths. They were very well. In fact, Truworths was slightly better than Woolworths. But I think staying with Woolies is good enough. They've got a very big kicker coming from the acquisition that they did in Australia, which boosted their earnings significantly. So on the earnings line, they're looking great, up in the 20s. And yeah, perhaps you do stay with them while that rolls out, and while there's a lot going on in the company which is improving, just the efficiencies in Australia in particular, but also some efficiencies in South Africa is improving on the bottom line. So yes, I think Ian's demeanour must be looking good at the moment.
Going back to Shoprite, the South African operation not doing particularly well, but if you are a long-term investor, you look at Shoprite and you say, okay, 129 stores, I think it is, outside of South Africa's borders, and that's where the growth is, mainly in Africa. So do you take the long-term view and say, okay, let the market sell off because the South African operations are under a little bit of pressure, but long-term, this is the one to go for?
I think that's how a lot of investors have looked at Shoprite, and particularly foreign investors. The problem with that is that 22% growth that we're seeing in the Africa bit is still only about 15%, even less than 15% of the total profits of the company. So it can't really boost the company significantly if the rest of South Africa is not doing that great. You want the two to be driving along together. You want South Africa to be growing nicely, and then Africa to really be growing very strongly, and then it makes the case for a good investment. But if South Africa is actually trading badly, which is I think what the trading update started implying, that things aren't that strong here, that's when all the foreigners jumped out and said, okay, no, we're not that interested in Africa anymore.
Janine, I just want to take you back a little to.
But having said that,
I just want to take you back a little to the comment you made a moment ago about Truworths and Woolworths, that you feel that Truworths' trading update was better than Woolworths' one. The market reacted differently. Is that a question of expectations being managed perhaps better by Woolies than Truworths?
No, what I was implying at is just if we just compare the clothing to the clothing. And the thing is with Woolworths, why their trading update was so strong overall is really because the Australia bit came through very strongly on the profits line. So when I'm looking at sales growth in clothing, Truworths actually did better. But food also traded very nicely in Woolworths, and Australia traded very well. So I think that's what I mean. As a whole, the group in Woolworths group did very nicely. But like for like clothing, I think I'd prefer the Truworths play.
As a whole, the retail sector, the way I look at the market is that money sloshes around from one country and one sector to another country and another sector. When I see what happened in the Eurozone today with PMI, I say to myself, well, people maybe then have a look at the emerging market or their emerging market exposure and say, well, I've done well in Shoprite and I've done well in Truworths and also in Woolworths in South Africa, but if the activity in Europe is starting to do well, maybe I should be looking at Carrefour or whatever it is in France. So is there a danger that with the high level of foreign participation in the retail sector of the JSE, what we've seen, what we've flirted with, i.e. big sell-offs, we've flirted with big sell-offs this year, could become something more meaningful in the future? In other words, do we get out of this sector?
Yes, that's definitely something we have to watch quite closely. Mainly because there is so much foreign shareholding. But the way we see it is we still have better dividend yields and better growth in South Africa. And until we see a very strong turnaround in places like Europe, and Europe, given that we've got a slowing demographic, it's quite difficult for them to get a very strong turnaround. I wouldn't see Europe as the place where money runs. But we do have another problem that when quantitative easing eventually pulls back significantly, we know that that has also been a stimulus for money to flow to the emerging markets. And it's really been free money. And when that slows down significantly, we do have to watch how money flows out of emerging markets, and that could very well be coming out of our retail sector.
Janine, just to pick up on what Lindsay was saying, when I looked through the Woolworths annual report, it showed that 35% of the shareholding is now offshore. It does seem that maybe we should investigate this a little deeper, and perhaps you can give us some insights into or more definitive feeling on exactly what the foreign shareholding is in our retail stocks.
So that's quite right on Woolworths, and if we look at Truworths, it's significantly higher. When I last looked at it, it was about 68% foreign shareholding, and companies like Massmart is obviously also incredibly high, and Shoprite is also there in the 60s, close to 70%. So on those shares particularly, we're really minority shareholders here in South Africa. And we have to be very aware of what's happening in companies like X5, which is the Russian food retailer, because we trade relative to them. Fortunately, in the last few months, X5 has traded very strongly, so Shoprite is actually looking cheap compared to X5. And but then shares like Foschini, Mr Price have got slightly lower foreign shareholdings. And maybe they still have the potential to increase their shareholdings, although maybe not Foschini right now, given that their trading's not that good.
Janine, a lot of noise in the retail sector, and it will continue, I think, to be noisy until the South African consumer regains his and her composure. Can you give us your picks? I mean, if you have to be in the retail sector, which you do at Omixa, which are the ones that you favour?
Well, we don't favour the food sector at the moment. We are investors in Truworths as the favoured clothing. Really because, as I said before, the trading update is not bad, but actually they are very cheap given that they're one of the better quality clothing retailers. As a whole, though, we're underweight retail still. I think, as you say, we're not in a great environment for the consumer. We'd prefer to see some of that data come through and verify our idea that the second half of the year is still not going to be really strong. Closer to the end of the year, we might see the consumer picking up a little bit. And then we'll look more closely at the retailers.